What you're about to see is a excerpt from our daily radio broadcast. We offer live audio and live video commentary daily. We've been broadcasting live each trading day since 2005. What you're going to see in this excerpt is a recap of our Concierge Trade Alerts. I'll be back at the end to answer any questions you have. All right, guys, we're creeping up on this weekly trading zone overhead. 2942/43. Don't see anything getting in our way. When we left this zone after that big spike down yesterday, we worked our way up almost to the zone overhead, and then we pulled back. We made another run at it. Got it this time on the nose, 2918, and we pulled back again into this area of support. And here's the news. Here's the employment news this morning. Shot straight up, hit that zone, consolidated, and then leg, retrace, leg. So from 2940 to 2942. That's about as high probability as it gets, with the caveat that zones are an area, and while we do get accustomed to seeing them turn right at the zone like here and like here, sometimes it comes a little bit shy, and we've seen examples of that. Here it is again, turning and holding right at the zone. Yeah, early in the week, here we go. We made 1, 2, 3 runs at that zone overhead, the 97, 98, and we came up a couple points shy each time. Got to 44.5. We're trying to get to 97. I'm sorry, we got to 94.5. We're trying to get to 97. So that's the state of affairs on that. Okay, let's talk Logic 247. If you don't know what Logic 247 is, it is our preeminent Emini alert service. What does that mean? It means from Sunday evening at 6 p.m. Eastern until Friday afternoon at 5 p.m. Eastern, we send you live in real time via the Telegram app, which we're big Telegram folk here. We use Telegram exclusively as our messaging service. We have, I don't know, about 10 different channels, I think. Everything from Concierge Trade Alerts to the Logic Alerts to trial discussions and member discussions, a place to post your favorite song. We even have a place to shoot the breeze. So if you haven't got a hold of Telegram yet, it's free, it's fast, there's no ads, it's secure, and you can pick it up at telegram.org. Put it on your phone, put it on your desktop, and then whenever there's an alert, whenever opportunity develops in global markets between 6 p.m. Sunday and 5 p.m. Friday afternoon, your phone will go dee-dee-dee. That's the best I can imitate that sound. I'll say it again in case you missed it. Dee-dee-dee. Something like that. Sounds like a telegram. You pick up your phone, you look at it. This is if you aren't sleeping or driving. You look at it. If it's a market that you trade, if it's a market that you follow, and if your situation allows it, you beat feet over to your desktop where you do your trading, and you bring up your charts, and you look at that alert, because I don't want you to just trade it because it's an alert. I want you to see on the chart what I see. Because if we go through that enough times where I see it, I show it to you so that you can see it, and then together we can watch it trigger and manage it as it tries to get to its target. We don't have to repeat that process too many times before all of a sudden you're starting to spot them yourself. And that's where you really want to be. You don't want to spend a lifetime of dependency on someone to hand you trades and tell you when to get in and when to get out. Now that's awesome in the beginning when you're learning, but at some point you truly want to set yourself free. What happens then is what you once called an alert becomes more of a confirmation. In other words, you see it setting up plain as day, just the way we taught you, and then your phone goes dee-dee-dee, and that just serves as confirmation that I just saw the same thing that you just saw. And then together, based on our methodology, strategy, and our indicators, we'll more than likely manage it the exact same way. So we are on week 61, and let me scroll up to the top. Last week, week 60, we had 40 actionable alerts. 4 of them got stopped out. 10% of actionable alerts stopped out. That's not the norm or the average. The average is 20% each week, but we had a very favorable week. This week, which started last Sunday night at 6 p.m. Eastern, thumbs up means the alert found its target. It went from the entry to the target, and in many cases, it has gone on to the final target, which is the weekly zone above or below the trade to target. So thumbs up, price found the target, and we're into Monday. S&P, NQ, Dow, Russell, Crude. I didn't do the euro or the pound this week. Not because there wasn't any opportunity. Our plate was so full with all the opportunities in the major markets we cover that I just didn't have a chance to stray over there. Tuesday, we got stopped out here on a crude trade. Then there's more S&P and Dow and NQ and crude and more crude. Here's an interesting on crude. We had a long. Then the market started to look a little indecisive. So we hedged the position by also considering a short entry. This is how kind the market was this week. It gave us two-sided action. It did the short, and then it did the long. It did the long, and then it did the short. It might have done the short first and then the long. I'd have to go look at the chart. Bottom line is they found their target, both of them. And on into the week, it was Wednesday night. We had a couple stop outs, on the NQ and the S&P. And now we're into Thursday. This one, I guess, never got resolved. I'll have to check with Valerie on that. And that brings us up to today. And today's the 3rd. Today's the 4th. The last ones I put out was last night. Pretty late. Well, like here. It says 11:35 p.m. Thursday night. That's Pacific time. So you got to add 3 hours to that. So it was right ahead of the London Open. Because of the important economic news that we had out this morning, I didn't want to put any alerts out in front of that. I wanted to let the market just act and react. And now, throughout the rest of the afternoon, unless we get quiet and go sideways, waiting on Sunday night. And we've got, Michael, is it 1 or 2 that Powell is speaking?
2 o'clock.
2? Okay. So at 2, now he's delivering the opening remarks at some conference or something. So it's not like when he does Q&A after a Fed announcement. That's a whole different environment. I don't think what he says today will move the markets unless he now, and please hear this, if he sees something in the market he doesn't like, or if the president has, I don't know, ticked him off lately, he could intentionally say something. I thought about this last night. If those employment numbers, we missed the number, but we're still lowest rate in 50 years. My thought was that if the markets had sold off again today for the 3rd day in a row, I would suspect he might say a little something in passing that would give everybody some confidence, something a little positive. But because of the move we've had, now we haven't taken back. Here, let me just flip back to the daily for a second. Okay. Now I got two sets of fibs on here. I'm gonna move the bigger one for now. We're just gonna look at this last leg. So today's Friday, Thursday, Wednesday, Tuesday. Tuesday's when we got the first big sell-off, followed by Wednesday. Yesterday we went even lower, but then we recovered, but we still haven't gotten back to where we were before the carnage started. And remember, now we got to pass through this area. Is it possible we hit it, come off, hit it again? Now, any number of things can happen. We could wind sideways at this area into Sunday night. What markets will often do, if they have difficulty getting through an area, or in this case, suspect they may have difficulty getting through this area, what I've often seen happen, Sunday night you get a gap higher open that takes you above the troubled area, and you can just gap and go. Although we do always watch for the opportunity for a gap fill trade on Sunday night. Let's say we gap above it, run a bit, okay? But the market still needs to fulfill that thing, that obsessive compulsive kind of thing, where it has to just come back and fill that gap. Approaching this area from above gives it the opportunity to act as good support. So that's a key. Watch that going into the close today. Do we get above this area or not? I'm thinking not, but anything can happen. Sunday night, if we get a gap higher open, we'll be watching for the gap fill, which will bring it back to wherever we closed today, whatever the closing price was. Now we're approaching this important area from above, and so instead of looking at it to be resistance, we're now looking at it to be support. That's a pretty valid narrative, I think. It's not a forecast, it's not a prophecy, but it's likely. Okay, I think it has a high probability, we'll call it that. All right, now back to logic. All right, so I just rolled you through everything that happened this morning, or everything that happened this week. Michael walked you through everything that happened this morning. Let me go here and here. Okay. All right. Here we go. Week 61. That's this week, the one I just scrolled you through. We've had 53 actionable alerts, still waiting on one to resolve. 50 of those have found their price target. 3 have been stopped out. So for the entire week, 6% of actionable alerts were stopped out. And again, I feel obligated to say, while that's great, love it, it's not the average. Don't want anybody to be confused, okay? 6% of actionable alerts stopped out. The average is 20. Markets are kind. All right, let's jump to the concierge and see just what happened. We have a channel now for the Concierge Trade Alerts. Well, we've had a channel for the alerts for a long time, but we now have one for the recap. And I think I managed to get, what, one chart posted in there last night. We had the partners workshop and a couple other things going on, but I'll show you what it looks like. And if you want to gain access to that, get a hold of Valerie. She'll certainly be happy to help you out with it. I think I'm closing in on it. Not yet. Where did it go? Oh, I'm looking for the wrong icon. That's the problem. Yeah, so the recap channel will be filled with charts like this one. I still got to do all of yesterday's. I marked them up. I just didn't get them posted in here. So you'll be able to go to that channel because maybe you don't get to come to the radio show every day, or you don't always have time to listen to it afterwards, which you can always do. I mean, we've got years of archives where we come in, do the recaps, Michael and I both, years at youtube.com/CFRN. And when you want to join the live show, when the live show is happening, you just add /live onto the end of youtube.com/CFRN. So each day going forward, you should be able to go there when you have the time and scroll through. And in the Concierge Trade Alert channel, you'll have the actual alerts. It's a static report, comes out once a day. Then you'll be able to go to the recap channel and see what happened. The good, the bad, and the ugly. All right. Last night, Concierge said, grab a screenshot if you want. Got them out at 6:15 Eastern. Our workshops are 9 p.m. Eastern every Thursday night. Michael taught some good stuff, so if you missed it last night, of course you know where to find the recording. Okay, got it, guys? Okay. Here we go. We'll start with the S&P. Last night, consider being long at or above 29.14. 29.14 is right here. Okay. We triggered. Now, the zone overhead is the target. Okay. There's a channel for the weekly trading zones as well. So when you see a long at 29.14, you instinctively know where the trade to target is. When there's a short at 28.90, you instinctively know where the trade to target is. I don't even need to put those in. I could, but it's a bit redundant. Okay. So from 29.14 up to the zone overhead, the trade to target, I think we hit it to the tick. We did. 29.18. That's 4 points. $50 per point. $200 per contract traded. Of course, if you've earned the right to trade multiple contracts, if you've earned the right to trade 10, that becomes a $2,000 move. A couple of those, and you paid for your passport. So, something to keep in mind. If you're still on the outside looking in, trying to make up your mind, weighing things, taking a look around, seeing what other folks offer, you should. You absolutely should. We do everything that we can to be as absolutely transparent as possible. In that, what Michael teaches and does in the training room in the morning, and what we do in the Logic 247 alert channel and the Concierge Trade Alert channel. We don't do it and then toot our horn on the good days. We toot our horn every day, good, bad, or ugly. Obviously, on a good day, it's simpler. It's actually enjoyable to come in and share the good news. But if we didn't come in on the not so awesome days and also share that with you, well, that would just be wrong. So
That would be wrong.
we like to stay away from wrong best we can.
Today, for instance, was probably our worst day in a little while. Let me go look at that again.
We still got the goal, right?
Yeah, we got the goal. We got the goal early on.
Did you want to grab the chart back?
No, I'm just looking at the spreadsheet.
Oh, okay.
Yeah, today was our worst day since September 5th. But we still got the gold and we still need green.
Can't argue with that.
Nope.
Okay, now
we
we
got the gold in 11 minutes.
All right, so we went. Now we do know important prices, important areas are almost always tested. And so after doing the 29.14 to the trade 2 target, $200 per contract traded, we get back below the trigger. We pull into this support area right here. Hopefully you can see it. I'll try to highlight a little bit. It was resistance, it was support, and again it was support for 1, 2, 3 hours. And the unemployment numbers came out. Off it went again, right back up to the zone. This time, instead of being rejected, that's rejection. Price was rejected at the zone. Not a bad thing because you got your target. Only three things happen at a weekly trading zone. The most likely, the one you see over and over and again, consolidation. Okay, that's 1, 2, a little over 2 hours that price just spent consolidating right there. That's the most likely thing to happen. Second most likely, rejection. On the ISM news yesterday, price spiked down, touched the lowest weekly trading zone for the S&P. By the way, we've published these zones for our traders every Monday, 6:15 a.m. Eastern, since December 14th of 2009. So what you're seeing on this chart today is nothing unusual. It's not out of the ordinary. Now, I did say that our results this week have been above average, but what you're seeing here with the actual zones themselves, that's not above average or below average. It's just how the zones have operated for the last, well, closing in on a decade. We got another month. We got 2 months. 2 months. We hit our 10-year anniversary with the zones. The third thing that can happen is the slice, and when I come across one of those, I'll show it to you. So price goes back to the zone, consolidates, starts moving higher. Once we get above this zone, price is telling us that it's now trying to get to the zone overhead. Price is always trying to get to a zone. I'm telling you, if that was the only information you had to work with when you sit down to trade, you could do well. Okay, I'm sure you would develop something to assist it, but just having that basic information, knowing at any given time, from Sunday evening at 6 p.m. to Friday afternoon at 5 p.m., to actually know where price is trying to go. How many times have you looked at a chart? Even those of you that understand technical analysis, how many times have you looked at a chart and you just kind of you have that little question mark over your head? You're just not sure what it's trying to do. Imagine a world where every time you sit down in front of the chart, without having to spend hours doing analysis and drawing charts and trend lines and fib lines and looking at advanced decline lines and the trend and the tricks and every other thing under the sun. And I'm not knocking any of that stuff. All great things, all do exactly what they were created to do, I'm sure. We just don't use them because for us, it clouds the issue. It invites confusion and discrepancy. When you have 5 things on your chart telling you to go long and 5 things on your chart telling you to go short, what do? It's analysis paralysis, and we all fall into it at some point, I think, but you do well to stay away from it, and you can when you know where price is trying to go. Now, from this 29.14 entry and the second trigger, I mean, a move, if we get up to that other zone at 42, that's quite a move. But let's say you weren't in, well, maybe you took the second one here, caught another 4 points. Then we go into consolidation. So you probably took your profit there, I would certainly think. Then as we start to move higher, let's layer one more thing in here. Where's price in relation to the BBC? It's above. Remember, when price is above this green line, that just stands for bull bear cross. When price crosses above, we're bullish for whatever time frame we're looking at. And when price crosses below, we're bearish. In other words, we anticipate lower prices. We anticipate lower prices. And then when we're above, we anticipate higher prices. So as long as we're above, once we get above a zone like this, right here, we can clearly see what the market's trying to do. It's trying to get to that next zone overhead because price is always trying to get to a zone. Here off of the consolidation, we had a beautiful impulse leg. That was the 9th. Now this was the trading off the 8:30 news, the employment numbers. This big green candle was the Wall Street open, 30 minutes, 9:30 to 10. And we caught a little pullback and just continued on. Lots of bullish momentum. No doubt there are folks out there who probably at this point, I'm pretty sure, because you have this little double top going on here, I'm sure there's people out there trading who thought, based upon their technical analysis and their understanding of how markets work, doesn't make them wrong. It just means they were doing what they were taught. They probably thought this was the high, especially after this little guy right here. Most of the world doesn't know it's consolidating inside of a weekly trading zone. That's something you and I know, but most of the world doesn't. I bet you there was lots of short orders going in to this Wall Street open. Not us, because price is above the BBC. And as long as it's above, we're going to anticipate higher prices. And when price is on the left side of the blue and climbing CFMA1, that's very bullish in and of itself. In order for that to happen, of course, the prerequisite is that it has to be above the BBC. Now, in the live training room, you guys hear Michael talk about separation quite a bit. I don't bring it up as often, but it's certainly valid. Everything he does and everything I do, they're inextricably linked for eternity. They look different to the untrained naked eye because he's operating in one time frame with some very hard and fast rules, which is it's so important that you learn those and that you get that fundamental understanding of how markets work and the clarity that our indicators and our narrative give to whatever the market is currently doing. But you notice here quite a bit of separation. You see on this climb here between the step line and that blue and climbing CFMA1, there was separation. Nice. That's nice separation. Because sometimes it tracks real close like that. So that was good. This is even better. Now, what's happening up here? Price has started to walk sideways. The step line, our exit signal, that's when our indicators tell us the move is potentially over. We should take whatever profits we have at that point, even if we haven't reached the trade to target. We started to walk sideways. We actually got a cross right here. Step line crossed that blue and climbing. If we were to get, if this candle suddenly went red and closed below the step line, that would be the CFRN Emini method official exit signal. We see it's a little bit of red right now. Am I thinking that's what's about to happen? You know, I'm not. Again, it's possible. What I think is we go sideways for a moment and then we pop, because the stuff that sent the market higher here and here, to the best of my knowledge, nothing has come out to negate that. So you've got folks maybe taking profits, okay? But I think we'll see some buying come in here at some point and push us. I think we'll get pushed up to that 42, 43. We could even close inside of that zone at the end of the session. We see that in a lot, closing right at or right in a weekly trading zone. However, if you're in this, if you're one of our passport holders and you're in this trade right now, you've got two options available. If you got in here at, well, let me take a look at logic. I think we had one on the way up this morning. May not have. Oh no, that's right. I didn't put anything else long out this morning because I wanted to get all of this news stuff behind us. So if you were trading, here's the concierge. But all of our traders, and this is where you'll get to, should you choose to become a passport holder, you'll be taught how to recognize what this means. Consolidation, remember, half the world's going short here because they think we've topped out. It's a double top, can't go any higher, but it did. As this green candle takes off, you could be long, based on our methodology, 29.22 up to, what are we at, 37? So that's about a 15-point move in the S&P. That's $750 per contract traded. If it gets from 22 all the way to 42, that obviously will be 20 points at $50 a point. That'll be $1,000 per contract traded. A zone-to-zone move. Do we see those often? Every day. That's what price does. Doesn't always go in a straight line, but price goes from zone to zone. And from here, it could have gone back to the zone. But after consolidating and making up its mind, it decided there's more buyers in the order flow than sellers. So the order flow dictates movement of the market. Up we go. Okay. Until sellers overwhelm buyers in the order flow, we'll roll sideways like this. What do you got? 1, 2 dojis in a row. So one of our traders currently in this trade, again, could take profit here, or you could bring your stop loss just right up, right there, right behind that step. Okay. Price comes down, takes you out. Fair enough. If those buyers come in, which I think is a high probability, and you can catch that additional 2-3 points to the upside. It's your choice. Discretionary trading. You get to make choices. Okay, so that covers it for the S&P. Let's go to the Dow. On the Dow, Concierge Trade Alert last night, consider being long, 26,210. Oh, we gotta back that up. There we go. 26,210. All right, 26,210. From 26,210, the initial trigger took us to a swing high of 47. So that's 37 Dow points at $5 per point. That's roughly $180 per contract traded. Now remember, these are 30-minute candles. We pull back into this area of good support right here. Let me just stretch it across and show you like I did on the S&P. That area was resistance. It was resistance. It was resistance. Consolidation, move above, pull back, confirm it's now good support. Up we go. Back into support. Here comes the news. And so now from 26,210, we put in a high up at 405. That basically, that's 200 Dow points at $5 per point. That's $1,000 per contract traded. $200 points available. $5 a point. $1,000 per contract traded. Right there, from here to here, and we're not to the zone overhead yet. That's the trade to target. There's still a potential 120 points yet overhead. That could potentially turn that $1,000 per contract into 15. Because it's walking sideways, we're printing smaller candles. If you wanted to take profit here, would that be acceptable? Absolutely. Remember, you're in control. With discretionary trading, you call the shots. First, we want you to learn the rules-based methodology so that you have a firm foundational understanding of how markets work. And then when you're ready, if you so choose, you move into the discretionary. It'll make sense then. The stuff, if you've learned well what Michael teaches you, when you move over to this side, the stuff you see me do and teach will all seem very logical based upon the principles that Michael taught you. Now, if we layer on one more thing, could price give us an exit signal, which would mean a red candle, this candle closing red below the step line? Could it give us an exit signal, pull back to the BBC, and then do another leg up to that zone? Absolutely. Based on everything I just said, anyone who might be currently in this trade, based off this Concierge Trade Alert from last night, every one of our passport holders had an opportunity to participate in this move. $1,000 a contract so far, potentially more on the table. But anyone who is in this at this point, having a stop loss right here, not a bad idea. Okay? That leaves you another $500 potential on the upside as we try to get to this zone going into the close. All right, let's go to the Russell. Last night, Concierge Trade Alert on the Russell. Consider being long, 1494. That's right here. More like right there. 1494 swing high, 97. So that's $150 per contract. That's what the market made available. Important prices, important areas, almost always tested. Price gets back below the trigger. Walked right back up to the trigger. Didn't quite touch it. Having a moment of hesitation here. Taking its lead from that sideways action we just looked at in the S&P and the Dow. So we'll just be patient and we'll see what develops here. Next, gold. Okay. Last night on gold, the Concierge Alert is to consider being long. 1514. And each one of these last night had a corresponding logic alert. And that's important because the concierge is based on previous price behavior. Logic 247 is based on current price behavior. Whenever the two are pointing at the same important price, important area, it always bears a second look. So 1514 1514, yeah, 1514 to the swing high here at 1516, so that's $200 per contract traded. Then we get back below the trigger again, and we run up to, so that's $170 per contract traded. Back below the trigger, off we go again. It's another $200 per contract traded. Back below the trigger, off we go again. It's another $150, $170 per contract traded. Then we get back below the trigger, and this time we run all the way to 1522. So from 14 to 22, that's 8 points at $100 a point. $800 per contract traded. On the NQ, Concierge Trade Alert last night. Consider being long at or above 7701. The zone overhead, that's the trade to target. So from 01 to 26, that's 25 points at $20 per point. $400 per contract traded. I'm sorry, $500 per contract traded. Then, as markets do, important prices, important areas, almost always tested. We get back below the trigger. We make that same run all over again. So that's another $500 per contract traded. If you participated in both, that would be $1,000 per contract traded from the entry to the target. Now, be real honest. A lot of training, systems, strategies, methodologies, it can be very complicated, convoluted, and expensive. But when the instructions say to consider being long 7701 and consider taking profit at 7726, you can probably just see right away, okay, it's not going to take me weeks or months to learn how to click my mouse at 7701 and then click it again at 7726. I can learn how to get in, I can learn how to get out. And while I'm doing that, while I'm honing my craft in SIM, because remember, you got to earn the right to trade with live money if you want to hang with us, because we just know that's in your best interest, okay? You can learn how to enter and exit. That's 2 mouse clicks. While you're learning the other stuff, which is all simple by design, okay? You'll learn over time why we expect this to be good resistance. And you'll start to understand that prices are almost always tested. And so when it comes back, it triggers a second time. You understand what that is, why it's happening, how to take advantage of that. So the methodology, the part where you really start to understand how markets work, how price flows, and as you get a hold of what we do is fluid across all markets and all time frames. So if you trade crude, is this for you? Silver, gold, the Russell. Well, we show you a variety of markets each and every day, even bonds, even greens. As you are learning how price flows, what our indicators are showing you and telling you, you have the benefit of being able to do what our traders do as you're learning. Not after you learn, but as you're learning. You learn how to click here, and then you learn how to click here. And as your confidence builds, you might click here, and then again here. And as you really start to understand the methodology and the strategy, when price takes out this high, you just might put on a trade yourself without any kind of an alert, because you clearly understand what price is trying to do. It's trying to get to that zone overhead. It may or may not get there, but as long as it's trying and you're moving along with it, guess what? An awful high probability, or a wonderful high probability, that whether you reach that trade to target overhead or not, you just might be able to get your goal for the day, your points for the day. So there you have it. S&P, the Dow, the Russell, gold. Do we do crude? Crude. Oh, we didn't do crude. That's the one we didn't do. Okay, glad I walked through that. On crude, we said to consider being long. 53.40. Which has not been touched. The short side was 51.75. We've not touched that either. And once you start receiving the Concierge Trade Alerts, your job each evening, when the alerts are posted, you go to your charts, the markets that you trade. You know, it's not even a bad idea to do it on all the markets, even the ones you don't trade, just so that your eye gets accustomed to seeing how price behaves when it reaches one of these two lines in the sand. This week we had a lot of examples of double-sided action where price actually triggered on the long side, generated some profits, and then triggered on the short side, did the same thing. Okay? In this case, the market's still trying to make up its mind. Are there enough buyers to support price going higher in the order flow? Well, there was off that news this morning, but then we hit the Wall Street Open, and that was not able to take out this high. So we're still in that making up the mind mode. So we'll keep an eye on it throughout the show. There's John. We'll keep an eye on this too to see if we're going to touch that zone or not. John, welcome to the show.
Hi, thanks very much.
Good to have you with us.
Sorry a bit late today.
No worries. Okay, there you have it. We've been doing this every day since 2005. The Concierge Trade Alerts, about 6 years. We're now in our 62nd week of Logic 247. If you're trying to learn how to trade Emini Futures without having live, real-time examples as they happen in the moment to learn from, to watch, to observe, to study, to transition into your own trading, well, that's a tough way to go. Better idea. Go to eminitrainingschool.com, eminitrainingschool.com. Sign up for the 5-day free trial. Not only will you spend 2 hours a day in our live Emini Trading Room, you'll also have 24/7 access to our Logic 247 Emini Alerts. You'll receive the Concierge Trade Alerts, our daily static Emini report, each and every day that you're on the trial. Along with your daily group training, you'll have access to one free one-on-one mentoring session with me. I'm Dwayne, founder of CFRN, and together with my partner Michael, we are the founders of the CFRN E-Mini Method. Simple by design. Remember, trading's not easy, but it can be simple. Let us help you find simple. If you have any questions, call us 949-42-E-Mini or just send an email to support@cfrn.net. As soon as you sign up, you're going to have immediate access to our Telegram channels, to our staff, our traders, everything our traders have access to, you'll have access to while you're on the trial. Go to eminitrainingschool.com. I'll see you in the Telegram channel.